Not in generations has Wall Street absorbed the number of body blows it took today.
The American financial system is rocked to its foundation as top Wall Street institutions topple under a mountain of debt.
When you step back for just a moment and consider the events of the last few days, it is truly unbelievable.
In 2005, while Wall Street celebrated record profits and housing prices soared to crazy heights, one man with a glass eye saw what no one else could: impending disaster. His name is Michael Burry, a medical doctor turned investor who bet against the entire housing market and won spectacularly. The trade that made him famous earned his investors over $700 million and himself netting a nice profit of $100 million.
So you made a ton of money?
Made a ton of money. Much more than I ever imagined, I'd ever have.
But how did a doctor with no formal financial training become one of the greatest market prophets of our time? And what is he warning us about right now? Michael James Burry was born on 19th of June 1971 in San Jose, California. His life will be marked by challenges from the very beginning. At 2 years old, he was diagnosed with a rare form of eye cancer. Doctors were forced to remove his left eye to save his life. From that moment on, Michael would see the world differently, both literally and figuratively. Growing up with a glass eye, Burry developed an introverted personality. He found comfort in books and analysis rather than social interaction. His analytical mind led him to the University of California, Los Angeles, where he studied economics and pre-med. Even then, the seeds of his dual interests were being planted. Burry went on to earn his MD from Vanderbilt University School of Medicine. By all counts, he was on track for a successful career as a physician. But during his residency in neurology, something else was capturing his attention. Michael was brilliant as a doctor, but you could tell his mind was often elsewhere. He would finish his rounds and immediately dive into financial research. In 2000, Burry made a decision that shocked his colleagues and family. He dropped out of his neurology residency to pursue investing full-time. The same obsessive focus that made him an excellent doctor would soon make him millions in the market. Unlike most Wall Street professionals, Burry was entirely self-taught. He devoured the writings of Benjamin Graham and Warren Buffett, the fathers of value investing. And during his medical residency, Burry began writing detailed stock analysis on financial message boards. His insights were so sharp that he soon attracted a following of professional investors. What set Burry apart was his willingness to look where others wouldn't. He had an extraordinary ability to spot value in companies others had written off. His approach was working. His personal portfolio was generating returns that professional fund managers could only dream of. His analysis was just on another level. He would find these gems that everyone else had overlooked. It wasn't just that he was smart. Plenty of people on Wall Street are smart. It was that he was willing to be different. While others chased trendy tech stocks during the dot-com bubble, Burry stuck to his value principles, and when the bubble burst in 2000, he was positioned perfectly. But Burry wasn't content with small victories. He was about to make the bet that would shake the financial world to its core. In the year 2000, with loans from family and his own savings, Michael Burry founded Scion Capital. The name Scion came from the Scions of Shannara, a fantasy novel about an unlikely hero who saved the world. Burry's timing was impeccable. As markets crashed following the dot-com bubble, Scion Capital thrived. In 2001, when the S&P fell nearly 12%, Scion returned a staggering 55% gain. Word spread quickly about the doctor with the golden touch, and by 2004, Scion was managing over $600 million for investors. Despite his growing success, Burry remained an outsider on Wall Street. He operated from California, not New York. He had no formal financial training. and he preferred solitary research to networking events. Michael wasn't interested in the trappings of success. He wore the same clothes every day. His office was sparse. All he cared about was finding the truth in the numbers. But while managing millions, Burry's obsessive research led him down a rabbit hole that others feared to explore. A rabbit hole that would lead to the greatest trade of his life. In 2005, while most investors were riding the housing boom, Burry became fixated on mortgage-backed securities. He spent thousands of hours analyzing loan documents that few bothered to even read. What he discovered horrified him. The housing market was built on a foundation of sand. Millions of subprime loans had been made to borrowers who couldn't afford them.
Michael, whenever you find something interesting...
We all tend to make money. What stock are you valuing?
No stocks. I want to short the housing market.
Really? But the housing market is rock solid.
Solid. Greenspan just said. Bubbles are regional, defaults are rare.
I look for value wherever it can be found. And the fact is that these mortgage-backed securities are filled with extremely risky subprime adjustable rate loans. And when the majority of the adjustable rates kick in 07, they will begin to fail. And if they fail above 15%, the whole bond is worthless.
Adjustable rate mortgages would soon reset to rates that would cause mass defaults. And these toxic loans had been packaged into seemingly safe securities and sold throughout the financial system. Burry approached major investment banks with a radical proposal. He wanted to create a way to bet against the housing market, something that had never been done before. The banks, seeing easy profit from this eccentric doctor, created a credit default swaps on subprime mortgage bonds, essentially insurance policies that would pay out if the bond failed.
Is there any way to do 200 million?
As Burry invested over $1 billion of his fund into these swaps, his investors were horrified. What Burry was doing was unprecedented. He was betting against the American housing market, something considered as safe as the US Treasury bonds. People thought he had lost his mind. For 2 years, his position lost money. The pressure was immense. Investors demanded redemptions, some threatened lawsuits.
No, he actually prefers that you email him. Excuse me.
Hi, Lawrence. We have no confidence in your ability to identify macroeconomic trends.
You flew here to tell me that? Why? Anyone can see that there's a real estate bubble.
Actually, no one can see a bubble. That's what makes it a bubble.
That's dumb.
Then in 2007, the housing market began to crack. And by 2008, it was in a freefall.
Might be time to get a life jacket and get out.
Holy shit.
I'm jacked.
Holy shit.
I'm jacked!
Steve Winston, Goldman Sachs. Listen, I've been reviewing your position. I wanted to discuss your marks, make sure they're fair.
Yeah, I think you mean that you've secured a net short position yourselves, so you're free to mark my swaps accurately for once, because it's now in your interest to do so.
Burry's credit default swaps skyrocketed in value. When the dust settled, Scion Capital had generated returns of 489% gain after fees. His investors made $700 million, and himself, he pocketed over $100 million. He had pulled off one of the greatest trades in financial history. After the greatest trade of his life, Burry did something unexpected.
You have 50 messages.
Mike, I can't seem to get a hold of you. Will you please call me at your earliest convenience?
Jeff, you're buying stocks? The market's at an all-time low. This is crazy.
In 2008, at the height of his success, Burry closed Scion Capital. He returned all outside investor money and focused solely on managing his personal wealth. The man who correctly predicted the greatest financial crisis since the Great Depression retreated from public view. He was diagnosed with Asperger's syndrome as an adult, which helped explain his intense focus and difficulty with social interaction. Over the years, Burry would occasionally emerge to offer warnings about new market bubbles. His pattern became familiar to market watchers: post a cryptic warning, delete it shortly after, and let the financial world scramble to interpret his message. Burry became something of a market oracle. When he speaks, people listen. The problem is, he speaks rarely and cryptically. In 2013, Burry returned to managing outside money with a new fund, Scion Asset Management. His SEC filings became closely watched for clues about his market outlook. But the man who saw the housing crash coming wasn't done making controversial bets. In 2022, Burry made a move that raised eyebrows across Wall Street. He began heavily investing into private prison companies. Quarterly filings revealed that Burry has made GEO Group his largest holding, worth $17.3 million. He also added a $7.8 million stake in Core Civic. At their peak, these controversial investments represented over half of his portfolio. Private prisons were deeply out of favor. There were political headwinds, ECG concerns, you name it. But that's classic Burry, going where others fear to tread. Once again, his contrarian bet paid off. The stocks performed well despite the controversy surrounding the private prison industry. But in 2025, Burry made his most dramatic move since the housing crisis. In the first quarter of 2025, Burry's latest SEC filing sent shockwaves through the market. He had sold his entire portfolio, every single stock except for one. The cosmetics giant Estée Lauder was his sole remaining equity position, which he doubled down on. Even more alarming, he had placed approximately $186 million in put options, essentially betting that prices would fall on favorites like Nvidia and various Chinese stocks. The financial world erupted in speculation. Was Burry predicting another market crash? The parallels to his 2005 housing short were impossible to ignore. When someone with Burry's track record makes a move this dramatic, you have to pay attention. Is he early again? Is he wrong this time? Nobody knows, but nobody's ignoring him either. As usual, Burry offered few explanations beyond cryptic, quickly deleted social media posts. What does the prophet of the 2008 crash see coming? Michael Burry's journey from medical student to financial legend defies conventional wisdom. He has repeatedly proven that an outsider's perspective can be the greatest advantage in markets. His story was immortalized in the Oscar-winning film The Big Short, introducing millions to the man who saw disaster when everyone else saw opportunity. Whether his latest warning proves premature, Burry's approach offers valuable lessons for all investors: the courage to stand alone, the discipline to do the research, and the conviction to act on your findings, even when everyone thinks you're wrong. I may be early, but I'm not wrong. The question isn't whether Michael Burry is right again. The question is, can we afford to ignore him?